Hey, this is June from Turning Point Life Investment, and this video is for the week ending in May 23rd, 2009. Okay, looking at the 3-year weekly view of SPY, you can see we pulled in another type of correction pattern this week. Not really, not a whole lot has changed from last week, other than we put in a doji type of looking candlestick, so a little indecision between the bulls and the bears. You can see we're coming out of overbought right here. Stochastic is starting to point downwards. But other than that, really there's nothing much that I can add that I haven't said already last week about this particular chart. Okay, so I'm going to jump straight into a 6-month daily view. So we did, once again, still trying to correct this entire rally right here. We more or less retested this 93 area, came pretty close to retesting 93 right here on, I believe, Wednesday. Okay, and we're more or less back here to support somewhere around 88. Okay, so as you can see, the market's more or less side bound right here, side in a range. Of course, if 88 breaks, we can probably retest this 50-day moving average, just like how we're retesting this 20-day moving average right here. If, on the other hand, we get a push by the bulls, most likely if we break through 93, we can probably head a little bit higher. Looking back, I think the next resistance is around 99, 100. Definitely 100, since that's a nice even number. Otherwise, if we break support, like I said, the 50-day moving average is a pretty good target, especially since we're trending. I mentioned many times already that when a market's trending, it's going to use its moving averages as support and resistance. And so the 50-day would be a great target. That will bring us to about 86 if that is the case. So, the thing about correction patterns is that it can take several forms. The most common forms are, for example, either some kind of zigzag where lower lows and lower highs, okay, or it can be a series of just rectangular patterns where it kind of fits nicely into some kind of rectangular sideways pattern, or the next common pattern is some kind of triangle where the market just kind of forms and gets squeezed into some kind of apex. Okay, so these three common forms are what I normally see in terms of correction patterns, just like here where we have some kind of a flat rectangular pattern there. So as far as which one this will be, it's kind of hard to say, but it's starting to look like a possible zigzag where we get another deeper pullback here. So that's more or less my best guess as to what type of correction this is going to be. So I'm just pointing out the possibilities that this thing can form or this thing can look. So, always expect all the possibilities out there, especially when it comes to correction, like I said, because it can take many different shapes and forms. Okay, going into the VIX, you notice how the VIX has been making lower lows, which is pretty surprising. We haven't reached this low ever since last year. So the VIX has been pretty low lately, almost to the extreme bullishness level down in the 20s. So you can see we had a nice push lower, and we managed to come out and retest this 20-day moving average. Okay, so any more corrections by the market, and we can definitely get a little bit higher jump by the VIX, probably towards this 50-day moving average. You can even see that stochastic for the VIX is starting to show some kind of divergence as well. And I already mentioned that the MACD has been showing some pretty strong divergence already. So I would expect the VIX to go a little bit higher if the market continues to correct. Okay, going back to the SPY chart, just to recap, watch for the upper level right here on 93. If it breaks, expect more bullishness for the market. As far as the bottom support, 88, it's turning out to be a pretty critical support level right now. If that breaks, I would say 86 will be a very good likely target. That's where the 50-day moving average is. If we get an even deeper correction, then look for support somewhere around. Let me take away these studies here. There you go. Probably 85. Okay, there's multiple support levels down here. The market has allowed for many support levels, as you can see here throughout this rally, but not so much as far as resistance. So only a couple of levels of resistance, but many levels of support that the bears must break to correct this market here.